Created and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
We're in the middle of an exclusive conversation with Mr. P.S. Jayakumar, the MD and CEO of Bank of Baroda. Welcome, sir, for this conversation. Just to start off with, now, earlier this week, you reported your bank's fourth quarter results, wherein you reported about a 3,100 crore loss. On one side, that loss number stays, but there's also an increase in the gross NPA figure. There's an increase in the slippages that went on during the quarter. You started your tenure here asking some of the investors and people who are watching the bank to be a little more patient with it because it was a time of curing. How much more patience are you asking from the bankers?
See, the patience was not only with respect to the NPA numbers. There were a couple of other issues as well. One issue was related to the franchise growth of business in terms of deposit, customers, etc., etc. And there was also the question about how to make the bank competitive and join the best in class, so that it could meet the future, which is going to be different, which has been different from the past. In fact, a lot more changing, a lot more faster on account of technology, etc. So the agenda had three things: how do we restore the growth? How do we make ourselves future ready? And then, of course, the legacy issue as it related to the NPA. And we've been working on all these three items concurrently. And as you can see from the business results that are there, the effort with respect to focus on growth is beginning to show some clear signs of progress. This year, we have grown balance sheet, the domestic asset business, mass and manus, by about, say, 18%, 17.69. And within that, if you see, the retail businesses have grown quite robustly by some 40+%. The current account, savings account ratios have also gone north of 41%, which was not the case when I came in, it was 33 or 32. And so that progress is visible. You've seen a slew of product launches, product extension, a lot of things to do with people training, development, which has also taken place. As far as the NPA is concerned, to a large extent, or to most extent, it's a legacy issue, and also been consistently affected by the economic environment of the day. To that extent, it has not been something that is fully within our control. Now, the NPA story might not have been as it looks today, had the recovery process been a little bit more robust, and that has been a little slow for a number of reasons, including the time it takes to get a new legal regime in place, and the new legal regime has to establish precedents, analogies, etc. So there's a consistent level of output from that. So that also has, in some sense, affected our recovery. So if you only have flows one way, which is a lot of flow into NPA, but little flow coming outside that, then you get into a situation as we are today. But on the positive side, we're beginning to see some clear progress. And so as this year goes about, I do think we'll come out quite well. And while one cannot ever rule out, as far as we see today, our portfolio under watch list, as well as absolute SMA2, are at historical low levels for us from the time I came in. And therefore, it's reasonable to expect the next year should be quite decent.
Now, this question is not just about Bank of Baroda, but also on a broader question about the public sector banking system, because this particular quarter has been pretty weak across state-owned banks. Some of the private banks also had weaker results, but state-owned banks have especially large losses reported during this quarter. Why should any investor or shareholder or somebody who watches these banks for work believe a bank chief when they say that the worst is over? Because the worst doesn't seem to be over ever. Every new quarter is worse than the previous one. So then why should you believe a bank chief?
You see, our business is not only about NPA management. There's a wider set of roles that we play as a financial institution, and something more on account of the fact that we have a public sector ownership and character. So it is that, but we must also give recognition to the fact that for a number of sectors, the expectations with respect to the improvement in the sector has not exactly played itself over in the last 12 months. Power is a case in point. But even if you were to take the power sector and look at it for the next 18, 24 months' time, we are seeing significant increase in the value of traded power. Presumably that is going to result in more PPAs being signed because they are at considerably higher value, higher cost than PPAs. And those in turn can then again bring certain degree of stability. But the fact is, if there have been delays in completion of the project, those are losses. The more the delay there is, or continuing delays, these losses tend to exacerbate. So to answer your question, I would say to you this way, that for all the banks, public and some of them private in the same sector, the results are, the reasons are quite the same, which is the resolution issues have affected everybody in equal manner. And the set of economic environment and those behaviors of those assets have behaved in a near identical manner. So it's not necessarily a public sector cost reason, ownership cost reason. It is a consequence of the assets that we financed, their outlook and their response to the economic environment and the resolution environment in which we have worked. But at the same time, you can see from the data, the recovery levels are improving and the provision coverage ratios are improving and the net residual issues are diminishing. So there is a logical point at which the problems would hopefully get resolved.
Right. I'll get to the last two questions on the asset quality and then I'm not going to bring it up again. But this quarter also, there was a divergence about nearly 3,000 odd crore for your bank. Typically, we've come to not expect something like this from Bank of Baroda, but then this quarter, this came as a bit of a surprise.
Yes. See, the divergence, in my view, what has happened for us was essentially the way we recognized those losses, those provisions, NPAs, was based on the consumer behavior with us in the way they behaved with us. So some of these accounts were fully compliant with the rules. The divergence arises because they were not paying to some other banks. And it's reasonable sometimes that we may not have all the information to make those decisions. In a couple of cases, we intellectually feel that what we did is right and we hold that position. But at the end of the day, there is a regulator and the rules require that they follow them, and so we are following them. So it is not necessarily a deliberate error or intentional error or oversight or a failure to read the issue. It is just two perfectly reasonable people can have a different point of view. But eventually one's view prevails, one person's view prevails. And that's
is it because it's the regulator's view?
It could be regulated, sometimes it could be the court, it could be any number of reasons. But if you look at it, of the amounts that was mentioned as divergence, bulk of it was taken in the first and the second quarter. Certain amount were taken in the last quarter because the divergence report itself was disclosed, was closed only somewhere between January and February, the audit process. And some of those accounts which we have provided for in this quarter as a divergence have also been recovered in June. So, we can expect that the final situation to mirror to what we did. So, what would have happened had we recognized this, had we recognized these accounts as NPA? We'd have taken another 500 crores of losses, provisions in the last year. Right. And that would have meant this quarter, this year, would have been 500 crores better. But again, in the larger scheme of things, those are not material numbers. And the net financial results in terms of net worth at this point of time is precisely where it is today, whether we had taken it earlier. So I'm not condoning, we have to recognize losses, but this was not on account of an effort to manage the books of account. It is a genuine different points of view. Now a few other things have changed since then. Now there is a lot more emphasis on credit data. So we have concurrent information of how customers pay with the other banks. And since we are also looking at the repayment history with the other banks, some of these issues should not happen. That broadly is what I would say. But still, it is still possible, even with all of this said, there could be a point of view that we as operating managers may feel about a particular account. Right. A view that may not necessarily the regulators may hold.
But does that matter then? When you're arguing with the regulator, does it matter what the operational managers feel about a certain asset?
No, but the operational managers make the decision based on the judgment. If there was an effort to hide the books of account, an effort to show something as received which is not received, then those are different sets of issues. Here, the issue was not whether the customer paid or not. The issue was also that the customer was not paying to other institutions and accounts were generally weaker in terms of the forward outlook, and therefore a provision required in the opinion of the regulators to be taken. It is not based on their experience of the customer, the experience of the bank, as we saw them and as they reflected in our books of accounts.
Sure. You said this, in the larger scheme of things, this is less important. But
I'm not saying it's less important. All I'm saying is, as we stand today, the financial impact is exactly the same, whether we had taken it now or we had taken it 1 year.
So something which has a sort of a futuristic impact on your financials would be recoveries from a number of these accounts, not just NCLT, even outside, the bank's efforts to recover money. What is the outlook for this new financial year, and are we going to see all of those returns actually coming back, all of that money stuck coming back?
No, it's never going to be that everything is going to get resolved, but two things are happening. One, the provision coverage ratios are adequate. There is also a sense of urgency both on the part of the customers and the bank to set the old issues behind and move forward. And the procedures relating to the courts are also increasing. Public opinion is not entirely favorable for promoters and other banks to default to banks. And so everybody, I would think, most sensible people would like to put the issues behind, come to some resolution and move on. And so I do see that the recovery factors would improve. Now, how much it would change, I could explain to you from the perspective of where we are with respect to the future expected flow. Those are reasonably contained, as is evidenced by our SMA2 numbers, the balance and restructure, and also because of the cleanup that the RBI February 12th policy has had. Therefore, the absolute amount of further flow is kind of restrained. The recoveries are going to happen, and even if we use historical recovery and just overlay a few NCLT number recovery, we should pretty much be in a very comfortable position. For that reason, we remain optimistic. The other thing, while we keep talking about NPA, and it's important we speak about them, the growth story. And what we've been able to achieve on the retail side is truly remarkable, not merely in terms of the volumes, but also in terms of the quality of accounts. In this investors' presentation, we are given distribution of scores, distribution of risk weightages, incremental, capital consumed incremental loan. And when you look at all of these numbers, NPA, payment pattern, month on books analysis, etc., etc. But when you look at all of these things, it shows a growth and it shows a quality growth. Sure. Now, it's not the growth that is something to be satisfied about, because growth is actually an outcome of what we do. What we have been able to do over the last 2 years is to build a lot of infrastructure, people, better processes, more forward-looking approach of meeting clients, asking for business. All of those will further improve as we go on. And that gives us a sense of comfort that we are going to continue to grow. And we are also well positioned from a capital and liquidity perspective as well. And so keeping all of this in mind, there is every reason to feel optimistic of what is going to happen going forward.
You bring up
that really is what we should look at it. In 2016, the first year I was on my role, my point of view was, unless we had the infrastructure in place, unless we had collection systems in place, unless we had new policies in place, there was no point growing, because you're most likely going to repeat the same set of mistakes. Now that has gone away. We put the structure all in the right way, and today we are scaling up quite dramatically. And I think, given the fact our market shares are quite limited in many of the markets, I do think there is significant opportunity for us to grow. I'm not talking about this year, I'm not talking about next year. I'm talking about a reasonable period of time looking forward.
You bring up the topic of growth, and let's take it from there. What exactly is growth going to be for Bank of Baroda? Where exactly are we going to see all of this growth coming in?
Okay, this year we grew by about minus 17 to 18%. I think we would like to sustain that level, although the same number will be on a higher base. So I would say our reflections on this is that we should be able to grow anything between 15 to 18, 19% during the course of the year. It will see growth in the corporate sector portfolio as well, but the retail portfolio and the other portfolio, non-corporate portfolio, will be larger. It's a part of an overall scheme of things to rebalance a portfolio with distributed risk weightages to every sector. But given the fact the corporate book is twice as the rest, the other groups have to grow 2 times as corporate book in order to be just at the same level, which is why we're looking at a 30% kind of growth rate in the retail and about 20-25% of growth rate in the MSME segment. That would help us to rebalance the growth with a 10-12% growth in the corporate sector.
Is it a measured, safe space growth, or are you also looking at segments that probably Bank of Baroda did not look at before?
We are expanding the segment, and initially our focus has been on mortgage business, on better scored customers, because those are extremely low risk. And now it's not that we're chasing risk, but we're chasing a more diversified approach. We've increased our share in, say, for example, transportation business, both in respect of personal automobile. Now we are in commercial vehicle fleet finance and a bunch of things. We're also expanding our earnings in non-lending business, wealth management, earnings through cash management program. We're also placing a lot of emphasis around the SME and MSME customer through supply chain, participation in trades, participation in various fintech platforms, participation in various other platforms. So it is very much an all-round growth.
You mentioned about your domestic book growing, and that's fair, but Bank of Baroda tends to have a very large international presence as well as compared to some of the other banks in India. What is the strategy there?
In the current year, we did two things. We repaid all our professional market borrowing, and we cut our placement lines. Effectively, those assets and liabilities did not represent any franchise value other than the fact they made us money, but the better uses of capital. Our customer liability growth continues to be strong. On the asset side, there are some discontinuities arising from the changes in LOU, the buyer's credit program, of which we had a very large share. Now, it's not a revenue issue. It's just that the asset category, that the asset category has to be retrieved in one form or the other, because it's about using customers' money, right? And in that, we are looking at a number of programs like supplier credit. We also are seeing some significant increase in the interest of our customers in investing in the US and UK and other markets, so we'll do that. The entrepreneur community of Indian community in UAE continues to keep growing. So we are not seeing the growth only because of the two reasons. One is that the buyer's credit program has been somewhat muted. Also, we had for some period of time a stable currency, and in fact an appreciation in the currency vis-a-vis certain other currencies. We also saw the runoff of the India development bonds and loans related to that. So in some sense, the portfolio has been static in a balance sheet sense, but qualitatively it is much superior because we are doing more host country lending, where we are having direct relationship with the customer, and there are going to be other spin-offs in terms of other relationships with the same customer, just as it's happening in the domestic market.
Last time we met in this room, you were talking about winding down the South Africa business. What's the status there?
It's done, or nearly done. We have exited our South Africa market. We have ceased to do our business. We returned bulk of our deposits, bulk of a loan, but legally and even otherwise, we have to provide for some time for customers to find alternative ways. With respect to our asset programs, we have got to sell the loans, so we've got to find other finances for that. As far as it looks, it's proceeding very well on the expected lines. The balance sheet has extremely shrunk. But till the last deposit is paid, technically...
How far is that?
I think we're looking at not later than September.
Not later than September. Fair enough. The last question. According to the 3-year term that you entered this bank with, it's going to end in about 2 quarters or so. What's your guidance to the bank? I mean, we don't know about your extension at this point in time, but what is your guidance to the bank and its employees going ahead? What should they focus on?
See, one thing I want to say is institutions are built on processes, procedures, and culture. They are not reflection of one person. So I'm not of the view that it's one person who makes necessarily the difference. So they may add higher weightage at particular points of time in the company's history. So what we have done over here is to do things which are absolutely necessary to do: product, process, digitization, technology, people training. And those are reasonably embedded at this point of time. There's a lot more to be done, but there's a clear path in which it will be done. And there is a fair amount of acceptance within the bank and in the board, and there is going to be continuity over there, that it is good to take this to completion. And quite honestly, there is no such thing as completion, because there's further disruption in technology, further changes in the market, and so it will remain a continuous process all the time. But the satisfactory thing is, from the point I started to the point today, I think we've made progress in fundamentally improving the strength of the bank, in establishing the growth story, in managing the people and transition processes, improving compliance structure, and improving our contribution and linkages to the various government programs. We've done well there, and I have no reasons to believe that the continuity will not be maintained. I do think once people see positive results from a number of things they've done, that success story will carry on. So I don't think it's very much dependent on what I would be doing or what the government would be thinking. But I still think it's a little premature to discuss it right now. I think as we come back to the next time, which is probably going to be middle of, end of July, I think it would be appropriate time to discuss about what I would be thinking, what the government is thinking. There'll be a lot more clarity around that. But it's not, the outcomes are not people dependent. This is an institution that is 110 years old.
Fair enough. Thank you so much, Mr. Jayakumar, for joining us in this conversation. Thank you.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes